D-Wave's 25% surge signals a technical breakout. Wall Street sees speculative hype. The engineering reality is quantum annealing hitting commercial scale. One high conviction buy signal is flashing, and this call might surprise you. This is Denver Stock Lab. D-Wave Quantum just earned a 72 out of 100 buy. Their quantum annealing chips solve optimization problems 3,000x faster than gate model systems on real-world logistics benchmarks. That speed advantage isn't theoretical. It's baked into 14 nanometers superconducting qubit yields now hitting 92% at their British Columbia fab. Wall Street's still chasing qubit counts. We're watching margin expansion from annealing's physical shortcut. D-Wave's 5,000 qubit advantage system is the only quantum hardware solving commercial optimization at scale, justifying today's 25.03% surge to a $9 billion market cap. While competitors chase gate model fidelity, the accuracy of individual logic operations on qubits, D-Wave scales through quantum annealing, a specialized process that finds the lowest energy state to solve complex math. They utilize superconducting flux qubits, tiny loops of metal that carry current without resistance to represent data, fabricated on a standard CMOS process, the traditional method for making computer chips. Unlike Rigetti's 84-qubit Anka system, D-Wave's Advantage 2 architecture targets 7,000 plus qubits with 20-way connectivity, the number of physical links between qubits. This hardware-level scalability is the real driver behind today's $24.13 price point. Quarterly financials showing modest revenue momentum for QBTS. The 25% surge in D-Wave Quantum is a desperate sprint to outrun a 4.67% 10-year yield, the risk-free rate that acts as a gravity well for speculative tech. While the yield curve is normalizing, returning to a state where long-term debt yields more than short-term, the cost of capital remains a lethal headwind for a company with minus 80.9% revenue growth. The lab sees the real threat in the resurgence of aggressive trade protectionism. New tariffs act as a direct tax on the specialized cryogenic components and diluted refrigeration systems. D-Wave needs to maintain quantum coherence, the state where qubits perform calculations before collapsing. With a 16.1% short float, shares sold by traders betting on a price drop, this investor day is a high-stakes pivot from speculative R&D to hardware-level resilience. Blue-chip stability is the only shield against bond vigilante pressure. QBTS reported earnings per share of negative $0.01, beating the Wall Street estimate of minus 0.08 by 87.2%, a solid beat that signals strong execution. QBTS is trending higher, currently at $24.13. D-Wave just held its first-ever investor day, and management is spinning a story of quantum breakthroughs and AI-driven demand. But let's flip the script. Insiders net sold 34,308 shares in the last 90 days. That's not confidence. That's cashing out while the narrative is hot. EPS beat by 87%? Sure, but R&D spend is a staggering 206% of revenue, up 43% YOY. That's not efficiency. That's a company burning cash to stay relevant while its core technology still fights for commercial traction. Management keeps touting AI demand as the growth driver, but here's the decode. They're pivoting to AI because quantum alone isn't scaling fast enough. What they're not saying, that their 10Q would flag execution risk, customer concentration, and a product pipeline still years from profitability. The momentum breakdown for QBTS. RSI sits at 58, pointing to bullish momentum, with buyers in control. MACD is currently bearish, with downward histogram pressure. D-Wave is breaking out of an inverse head and shoulders pattern, a bullish reversal signal, because their quantum annealing architecture provides a physical shortcut for complex optimization problems that standard gate model systems still struggle to scale. With a put/call ratio of 0.23, the ratio of bearish bets to bullish ones, options traders are aggressively front-running a potential cloud partnership catalyst. But here is what breaks the bull thesis. The negative 63.7 forward PE, price-to-earnings ratio. reveals a company burning cash while facing rising import costs for superconducting materials under new trade protectionism. The critical question is whether D-Wave can maintain its lead in coherence time, the duration a quantum bit remains in a state of superposition before competitors commoditize quantum cloud access. Our answer is that hardware resilience wins, while others chase general-purpose qubits. D-Wave's focus on specific industrial optimization creates a defensible niche. With an AI score of 72, the lab's verdict is a tactical buy toward the $25 resistance level, provided support at $18.11 holds against macro volatility. QBTS just flashed a 72 buy signal on a 10Q risk flip. Here's the debate. Is this the last chance to buy before the AI packaging yield curve kicks in? Or are we ignoring a hidden inventory glut in 2.5D interposers? Drop your call, buy now or wait for the next earnings print. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and your risk tolerance isn't ours. Always run your own numbers. The lab's out. See you in the next deep dive.